we hear, okay, well, it's a bubble, PE, these stocks are, well, let's take a look. March 2000, the PE for the NASDAQ was 175. And I got this information from CNN Money, 175. If we take a look at the PE today for the NASDAQ, and I'm sorry, that was not the NASDAQ 100, that was the NASDAQ composite overall. So if we take a look, same exact index, the NASDAQ composite today, and this is from Bloomberg last night, the PE is 42.
Welcome to the Rose Show podcast. Thank you so much for joining us today. We have an exciting show today. I'm here with Blue Chip Larry Tentarelli, and we're going to go into a deep dive of AI 2024 versus .com, 1999-2000. There's been a lot of narratives going around about we're reliving the 1999-2000 time period. But Larry and I traded and we're around back then when it happened. So we have a different mindset with that. How you doing today, Larry?
Rosanna, I'm doing great. Good to see you. Thank you for having me back on. I'm really excited for our subject today.
Thank you so much for being here. I'm so excited to meet with you. I think it's like the third time and plenty more to come. Love your charts, your data, your analysis, and your wise words that you share from so many great traders. Larry, you're one of the best. And I'm so excited to do a deep dive today into this. So what I like to do is you have some great charts that you created. And we're going to go into all of them. We're going to talk about the NASDAQ and we're going to do some chart comparison between 1999 and nowadays, 2024. We're going to go into valuations, the profitability, which is key, and talk about the parabolic stocks, and of course, NVIDIA versus Cisco. So Larry, wherever you want to begin, please begin. You can screen share, you can show us your amazing charts in comparison.
Okay, we'll go through actually, we'll just start for a minute with how we got here and with this conversation. So
Perfect.
I'm on Twitter with you. I've been there for going on 11 years now, since 2013. And, I'm glad to share my experiences in the market and what I've learned. But I started trading 1997, 1998 is when I started. So I got in, and we're going to look at the chart, but I got in right as the NASDAQ 100 was about to go parabolic. And when I got in, I didn't know anything else. So I thought that it was normal for stocks to go up 10%, 15% a day. And everybody talks about, SMCI. And I know you've had SMCI forever. I remember you talking about it when it was under 100, But back then, we had 20 or 30 SMCIs.
Yes,
and
I remember.
I'm going to go through the charts. So, I've got my website, I've got subscribers, and what my job is to do is to tell my subscribers what I really see. I need to tell them if it's sunny, I need to tell them if it's going to rain, but I need to give them an objective view, because my job is to keep them on the right side of the market, whatever that side is. So I study this data, and when I see these comparisons, on the financial media or on the internet, and we hear, this is the AI bubble and Nvidia is Cisco. What I do, because I was there, 98, 99. So what I do is I fire up my charts and I fire up my data, and I say, okay, this is a pretty big narrative. Let's actually crunch the numbers and see, is this really the same thing all over again, or is it different? And that's what I've brought with me today. So I think we've got some really interesting stuff to look at.
Well, I love your data. I have to say, bluechipdaily.com is your website. And I think you are a voice of reason, because you're very objective. And that's very important with trading, is to not get emotional and to get subjective. You, on the other hand, remain very objective. You look to your charts and you do that analysis. And that's what you're going to be sharing with us today. And we're so grateful to have you as part of the Twitter community. And I call you a friend, Larry. You're awesome. And I always turn to you for all these excellent analysis. So I'm ready to get started. I'm excited. I can't wait to see these charts. Okay, awesome, Larry. AI 2024 versus .com 99 to 2000. Let's dive right in.
Okay. Okay, so we're going to take a look. What I wanted to do, Ro, is I wanted to bring your viewers and my viewers some objective data so we can look at the numbers, we can talk about it, and then everyone can make their own decision. Is this a bubble? Is this 1999? Is Nvidia, Cisco, all these things? So I brought some data. So we're going to get started, and here's what we're going to take a look at. We're going to look at the charts. We're going to look at the numbers. We're going to look at how many SMCIs did we have in 1999. We're going to look at the IPO frenzy. We're going to compare the two heavyweights, Nvidia versus Cisco. And then we're going to talk about the money, a little bit of Tom Cruise, show me the money. And we're going to see, you know, where is the money? So we'll get started. You can stop me anytime. So first thing, I just wanted to let viewers know who don't know that this is not my first time saying that I don't think we're in a bubble. So going back to Twitter, May 2023, wow. the bubble talk was starting. And I signed on to the computer over the weekend and I saw AI is a bubble. I looked at the charts and I posted, I said, I don't think AI is a bubble. I said, I think we're just getting started. And this was in May of last year before Nvidia and all these stocks really started to break out. The next day I posted that, and this was in May, that to me, these moves that we saw were baby moves compared to what I saw back in 98, 99, 2000. And we're going to look at some of these charts shortly. And then I posted it again back in December. So I'm not really coming in here, you know, after, you know, in the ninth inning and saying, okay, you know, let's start to play baseball. You know, I've been saying the same thing to, I've got 90,000 people that read, you know, read my postings. I've been saying the same thing for a while. So we're going to start with the charts. And I'm going to let your viewers and my viewers, let's make our own decision. So I want to look at the numbers because that's where it all starts. So this is a chart of the NASDAQ 100 going back to 1995. So the end of 94, the NASDAQ 100 was under 400, okay? It went in 5 years, it went from 400 to 4,800. That's a 12x move in just over 5 years. And when I got started at the fun time. So I told you I started right around here, right? 98, it was 1,000. 18 months later, it was 5,000. So I got started here and I was buying stocks. I was buying, you know, anything.com and I was buying Cisco and all these, and they just kept going up. And I'm like, you know, this game is easy. You know, unfortunately, I was here and then I was buying them down there too. But so keep these numbers in mind. 12x in 5 years.
12x.
If we look at today, this is NASDAQ 100 2018. I'm going to go to the dead lows, the lowest number I can, 5,800, right? If we look at the highs, and I put this presentation together a couple days ago, but just under 18,000. So in 5 years, in 95, NASDAQ 100 went 12x. Right now, over the past 5 years, it's gone 3x. So if we were to say that today's NASDAQ 100 is the same as the 95 to 2000 5-year window, we would need to be at 70,000 right now on the NASDAQ 100. So we're at 18. So when we look at the charts and say, okay, we went up 1,200% in 5 years, we're nowhere close.
No way.
Nowhere. Listen, if NASDAQ 100 was 70,000 right now, you and I would be on our yachts.
Yeah, I'd be.
And I would have you know, I would have my my captain take the call for me.
Exactly.
But and we're not. So
no, we're not.
So the first thing when I look at point number one, what has the market actually done? Listen, 3x in 5 years is a great run.
Yeah.
But it's not 12x.
No, and it's not that type of territory, bubble territory right there. No.
No. So if no questions, I'll move on to the next one.
Well, let's just sum it up. We basically see 3x versus 12x. That's significant difference. And we would be needing to trade, 70,000 to be at the same X level as 99, 2,000. Significant difference. So I think that is the first great point right there. The momentum and the extensive growth is not there like it was in 2000.
I mean, if you look at this chart, Ro, from the prior high, we're up about 8 or 9% above the prior high from 2 years ago. So, on social media a couple months ago, the big point that I would see from some of the bears is, hey, the S&P 500 hasn't done anything for 2 years. If you've held it, you've made no money. So, but I see that from a different view. When we're just now only 8%, to me, it's hard to say something is a bubble when it's just 8% over the prior high.
Exactly. Agree. If you want to go back to that slide again of 95, right there, look at that.
Yeah.
See that difference and that rise, steady rise.
So when this broke out over 1,500 in 98, 99, it just went parabolic. Yeah. Look at this. It hit 2,500 in, this looks like August of 2,500, right? In March, 7 or 8 months later, the NASDAQ 100 had almost doubled.
Wow.
7 or 8 months. So it's just, if we just look at point number one,
right there.
Not even close. Not even close. So the next thing I want to take a look at, because we hear, okay, well, it's a bubble, PE, these stocks are, well, let's take a look. March 2000, the PE for the NASDAQ was 175. And I got this information from CNN Money. 175. If we take a look at the PE today for the NASDAQ, and I'm sorry, that was not the NASDAQ 100. That was the NASDAQ composite overall. So if we take a look, same exact index, the NASDAQ composite today, and this is from Bloomberg last night, the PE is 42. Wow. So if we compare apples to apples, PE, we're at 25% of the valuation on the NASDAQ today versus where we are the peak of 2000. So once again, if it was apples to apples, the NASDAQ today would need to be trading at 64,000 to have the same PE level as March of 2000.
Well said. To me, this is key because, and we're going to get into the profitability, but and that, to me, being a fundamentalist, I always look at the earnings per share, the PE, the growth, all that. But this is so important because you and I know, being, traders back then and experiencing that, these companies were not making, they weren't having earnings. They were not profitable. There was a high speculation. Nowadays, these are our cash generators. These are the companies, the chips are the new oil, they say. But this is significant. 42 PE versus 175. That's significant.
We are at 25% of the valuation.
Wow.
With where we were in 2000. And you hit the nail right on the head. There were companies that were coming public, quite a few, and we're going to look at this in a few minutes, that not only did they not have earnings, they didn't have sales. They had no revenues. There was a company called Corvus that was in fiber optics. They came public in the year 2000. They had no sales. They had no customers. They had no sales. They came public and they had a $33 billion market cap. This company was bigger than General Motors at the time with no sales.
Wow. I can't wait to
Yeah, we're going to take a look at some of that. So now we're going to go to number 3. because SMCI is the, we hear SMCI, what a stock, what a stock. Great job by you, right?
Thank you.
So SMCI, and we're going to take a look at shortly what SMCI has done, but here's an article from the New York Times. So we're going to take a look at some parabolic stocks. So what this shows is in 1999, the top performing stock of the year, Qualcomm went up 2,600% in 1999. So it went 26x in 1 year. SMCI is up 10x in 1 year. So on top of that, so 26x, and we're going to look at this, there were 12 other stocks on the NASDAQ that went up at least 1,000%. So there was another 12 that went 10x, and there was another 7 that went 9x. So right now, SMCI is 10x over the past year. In 1999, there were literally 20 SMCIs. There were 20 stocks that went 9x or higher. There was 13 that went 10x or higher. And then we'll take a look. So, and this is just another article that I picked. This was off of CNET, but this shows top tech stocks for 99. So we can see Qualcomm 2,600, Broadvision 1,400, Metrocom, I don't even remember them, 1,400, Ortel 1,200, 1,100, ARM Holdings. I wonder if that's the same ARM
I
that
know,
came,
right?
right? 1,100, BEA 1,000, DoubleClick, Emulex 1,000. I had Emulex. It was not fun when it went down like 40 points one day. But so we're going to take a look now. So MicroStrategy, I think you had their CEO.
Yes, I had Michael Saylor on here.
So
pretty amazing man.
Oh yeah, that was a great interview. I loved it. That was a great interview. MicroStrategy back in the day went 45x in 12 months. It went, and this is all split adjusted, I believe, because it's I think they've had to, bring the price back. But $73, right, in April of 99, $3,300 in March of 2000, 45x. If you put $1,000 into MicroStrategy in April, you had $45,000 less than a year later. Now, and you can see the trip back down from 3,300 to 165. Look how fast that was. But I think they had some accounting issues, which was pretty prevalent back then. Qualcomm. So Qualcomm went 26x in 1999, but if we dial it out even further, 18 months, it went 42x, $1.54 to $65 in 18 months. So if you put 1,000 in here, you had 18,000. If you put 10 grand in, you had 180,000 in 18 months. JDS Uniphase, this was my favorite because this was the one that I made and lost the most money in, unfortunately. JDS Uniphase went 38x in 18 months, $17 to $6.97. And then it took the out the window path on the way back down. But these, listen, we're looking at SMCI, so let's take a look. So remember, we had 20 stocks that went up 900% or more in 99, right? So what I did, I dialed into the database and I used the same criteria that those articles mentioned. Stock price over $5, market cap over 1 billion. And I went into FinViz, there's 2,300 stocks, and I just took the top 20 performers over the past year. So SMCI is up 1,000%, so it's 10x. There is a little biotech stock that's 25x. It's a $1 billion market cap. So what did that start at? A $40 million market cap on its run. But then if the benchmark is 20 stocks that did 900% plus, there's 2. And then to go even further, when we look into this group, because keep in mind, I want to make this a very unbiased study. if I go into the database and I say, take out all these speculative biotechs, which we know it's a whole different market.
The whole different ball game.
Yeah, it's a whole different world, whole different universe
biotechs.
with these biotechs. But if we look at the top 20 performers, there's not 20 that are over 900%. There's 2. And then 10 of these, 1, 2, 3, 4, 5, 6, 7
biotech
are biotech. So if we take all those out, this number comes down even more. So really what I see here is the stocks in 99 that were going 30x, 40x. They were household names on CNBC every single day. Qualcomm, JDS Uniphase, MicroStrategy, Internet Capital Group. If you turned on CNBC, these were the stocks they were talking about all day. You don't go on CNBC and hear about iPoint Pharmaceuticals or Ambrx. So it's a different. In 99, it was literally, if we had super micro, 20, a whole group, 20 stocks just like that. So when I look at stock performance, I don't see anything. Super micro has been an outlier. In 99, it was just every stock was going up 800%, 900%. So once again, I just don't see the same comparison as far as Parabolic.
You don't have that euphoria, that same sentiment. It's I remember everything with the .com. It was like everyone was piling into those. And yeah, you don't have that same feeling. Although some people nowadays feel like it's euphoric, it really isn't when you think back to that time period of 1999.
It's relative. My friends that I talk to that have been doing this for 25, 30 years, the people that I talk to that were there back then, they're like, this is like first inning stuff. This is like,
exactly.
It's like the warm-up pitches. So now we're going to take a look, something super interesting.
I like that.
So now we're going to get to the real speculative stuff. So we're going to take a look at IPOs. And to me, the IPO, a real bubble, is when you start to get the IPOs.
Yes.
When Larry and Rosanna get together and we say, okay, let's come up
IPO.
With, let's come up with, AI.com, and we're going to pick stocks with the AI, and we're going to sell this to Wall Street. So here's the thing. 1999 took this information right off the IPO database. In 1999, there were 289 internet-related IPOs, and it shows right here, internet-related IPOs, compared to 42 the year before. The average internet IPO ended the year 266% above its offering price, compared to non-internet IPOs that were up 59%. And then down here, of the 30 largest first-day gains in IPO history, 29 occurred during 1999. But here's where it's going to get really fun. So here are the top 10. They call it the first-day pops. So VA Linux came public, it looks like December 9th of 99. First day, it was up 697% first day. The Globe.com up 600% the first day. Foundry Networks up 525%. WebMet. Now here's the thing. I don't know if any of these, MarketWatch.com is still around, Akamai Technologies is still around, but look at some of this. Now here's what you see. VA Linux, first day, 695%. But here's the scary thing. The first day it closed at $239 a share, right? 13 months later, it traded for $2 a share.
Wow.
So this is how it unwound. The Globe.com, I remember when this came out because this was the biggest one at the time. This was 98. It was up 600% the first day. Most of these companies did not have earnings. We're going to take a look at it some more shortly. It was, it was a lot about eyeballs, and we're gonna grow into profitability. But here's the thing: investors wanted IPOs because it was easy money. And when I was at the brokerage house, what you would do is your best and biggest clients would get the IPO shares. So that the brokerage firm would get so many IPO shares. The top producing brokers would get so many allocated. And then you'd put those in the account of your best customer, and you're up 600%. If I'm your broker, and you've got some VA Linux up 600%, we're probably going to be doing business together for a long time. But this is what we have not seen.
No, I
We
mean, you
have
start
not
the day.
seen.
Yeah, like right here, just the example, exactly right. You start VA Linux opening price $30. The first day closing $239.25.
Yeah.
I mean, that's insane. And
Yeah.
then
This was every day. Whoa, this was
yeah.
every day. It
Wow.
was, yeah, 600%, another 600, 500, 500, 483. So to me, when I hear the word bubble and I hear speculative, this is the stuff, because this was like Las Vegas slot
Yes.
machine, lottery stuff. Let's put it all on, red 32 or whatever the number is and see what happens. This isn't a real bubble. This is the type of stuff that you see. This is just pure, just speculation, people buying stuff they don't even know. It didn't even matter. It didn't even matter what the company did. You just bought a ticker symbol and you hope that you got it right. But here's the real proof in the pudding. This is the number of IPOs which doubled on their first day of trading. And this is from it's a University of Florida study. It's actually on the PBS website. But number of IPOs that doubled in their first day of trading. In 97, there were 2. In 98, there were 10, there were 12, right? Then when we go to 99, 19, I can't see that number there. I'm going to move it. 19, 24, 26, 48, and 48. So there were, off the top of my head, I made my notes, 117 IPOs that doubled. And I actually think I'm wrong, because 48 and 48, it's more closer to like 160. I don't have my notes. I thought I had them. But in either case, it's about 150 or 160 IPOs that doubled.
Wow.
So it was, if you think about it, it's almost every other day you had an IPO that at least doubled. And this just means that they doubled. It doesn't take into account some are up 300%, some are up 600%. But here's where the bubble kicks in. 97, 2, 98, 12, 99, you've got over 100. And you see, that's where the real froth starts to come in. Because here's what happens is Wall Street knew that, listen, they make their money when they do the deal, right? When the issue comes public, they make their money, they get their investment banking fees and their underwriting fees. So listen, they knew there's a huge market for this stuff. This is all speculation. I haven't done the IPO numbers on where we're at right now, but I think it's safe to say, because we watch CNBC and Bloomberg all day, if we had 100 IPOs doubling, we would know. It would be on Twitter.
Yeah.
So pure speculation as far as that goes.
And that's significant. This is an excellent point. You see that rushing for the door. You see everyone trying to come out and try to get all this money and all these deals done while they could. And it really took off. The end of 98, it started. And then you see right there, it just led to that peak at 99 to 2000, first quarter of 2000. Look at that.
Yeah.
Wow.
Yeah. And it just stands out. And like I said, I remember, and keep in mind, I didn't know when in 98, 99, I knew very little about the stock market. I didn't really know how to read a chart. I was new. I was trying to figure everything out. But when we look back at it and say, okay, this IPO wave, we have seen nothing like, and when you get a real bubble, you need that IPO, that just pure speculation. And if we get to a point where companies just start putting AI in their name,
Yeah.
roadshow podcast AI,
AI.
and it triples on the first day. That's how you know that we're closer to a real
And like
speculative
we're going to call it blue chip AI daily.
blue chip AI daily, and
Yeah.
but that's what it looks like.
Yeah.
That's what a real bubble looks like. So we'll take a look. Number 5, and this is the one that I find the most
I love
entertaining
this.
because Nvidia is my biggest stock position
Mm-hmm.
overall. Back in 98, 99, Cisco was my biggest stock position. And when I first started at the brokerage firm, I used to go to the senior brokers because I was the new guy, I was, wet behind the ears.
Yeah.
And I'd go hang out with these guys. And the one guy used to say to me, he said, "Kid, just buy Cisco." He says, "Just buy Cisco. Doesn't matter what day it is. Just buy Cisco." So that's how I learned. And Cisco used to just go up like 5% a day, 2% a day. It was a very strong stock.
Mm-hmm.
And that was the stock that you really couldn't. That was the stock you had to buy. If you didn't have Cisco,
I had Cisco as well.
yeah.
Yeah.
If you didn't, your clients would fire you.
Yeah.
You didn't want the phone call. Hey, Ro, my neighbor just made, $100,000 on Cisco. How come we don't have it? If you say,
Yeah.
well, the PE ratio, then so you had to have Cisco. But here's the thing. Cisco was the heavyweight back then, right? NVIDIA is the heavyweight today. But here's what I find interesting. NVIDIA, so their last quarter came out, they made 12 billion. Their last quarter, last 3 months, they made 12 billion. For the trailing 12 months, they made 29 billion. In the last quarter, and we're going to look at this math in a second. In the last quarter, NVIDIA made more money in 20 days than Cisco made in their entire year, fiscal year 2000. More money in 20 days
Wow.
than Cisco made for an entire year. And we're going to take a look at this. So I posted this on Twitter the other night. It's been pretty popular. So I took this right from our friends at earningswhispers.com. I want to give
I
them a
love Earnings Whisper. They're my
Give them
favorite.
Earnings Whispers if you're watching. Thank you for the data. But NVIDIA fiscal year 2024, which just ended, revenue 60 billion, net income 29 billion. And just for round numbers, I'm going to call it 30 in my head because 29.7 is close enough to 30.
It is.
So 60 and 30, they've got a giant margin, 72%. So almost half of their revenues went right to the bottom line.
Yeah.
But keep those numbers in your head, 60 and 30. Now we're going to go to Cisco. And I took this right off of their website, cisco.com. This was their best year. Fiscal year ended July 29th of 2000. So they did 18 billion in sales. So that's a good number, right? Because obviously, inflation dollars today for sales, but they did 18 billion. But on 18 billion in sales, they only put 2.6 billion to the bottom line. So what's that margin? Maybe 50, it's about 15%. So here's the thing. Their best year, Cisco Systems was really everywhere. Their best year's net income, 2.6 billion. NVIDIA last year made 11 times. And keep in mind, NVIDIA's profit curve right now is really starting to accelerate because they just, in this last quarter, NVIDIA made 12 billion. So they made almost half of the year's profits in one quarter. But that's why I say, from a profitability standpoint, you can't even compare the two because they're putting 29, 30 billion on the bottom line net income, whereas Cisco, 2.6 billion. NVIDIA in 20 days made more money last quarter than Cisco did their best year ever.
That is significant. That's to me like one of the top points. We have a monster stock. NVIDIA is a cash generator. They're efficient. They're able to keep their margins high. 50% of their revenues went right down to the bottom line. And it's all about earnings per share. We are shareholders. And it's all about that. What goes to the shareholders? We have earnings per share, significant. While on the other hand, Cisco, and everyone wants to say, oh, inflation, fine, whatever. The bottom line is it's still margins are margins. And we see that only 15% of those revenues went to the net income, the bottom line. And that's a big difference.
Yeah, it's a huge difference. And that's why I say when I saw that number, and when I put this information together the other night, it was late. It was after NVIDIA's earnings. I was probably up at midnight, in my office going through this stuff. And I said to my wife, I said, do me a favor. I said, look at these numbers and be sure that I didn't do something wrong, because I couldn't comprehend that in 20 days, NVIDIA made net income more than Cisco made in the year 2000. But after I crunched the numbers like 5 times, now here's the other, look at this.
The PE.
Cisco's PE at the peak was 196. Okay. So Cisco was the biggest stock in the market. It was over a $500 billion market cap stock on $2.6 billion in income. So the PE was 196. If NVIDIA traded at the same, get ready for this. If today is 2000, and if NVIDIA is Cisco, NVIDIA's market cap right now, if they traded at the Cisco PE, would be $5.8 trillion. Wow. Which is 4 times what their market cap, or 3 times what their market cap is right now. So NVIDIA's PE on a trailing basis is about 60 right now. It's real simple. They did 30 billion in net income, 60 times PE, $1.8 trillion market cap, which is about where NVIDIA is right now. If they were Cisco, they would have a $5.8 trillion market cap. And we can see, and here's the final thing that I wanted to talk about, because we do want to look at the profits.
Before you get to that, I want to go back to that. They're forward. I always talk about with my clients and with people, I always say, when you invest, it's about the forward, about the future. And you're always investing for the future. And look at that. Forward PE 26. I mean, it's coming down significantly. We're saying it's going to be cut in more than in half from where it is right now. That is major growth.
Here's the thing. I wish I owned more NVIDIA, because whatever I own, I don't own enough.
Exactly.
Because here's and that's the way the stock market is. If it's working, you never own enough. And if it's a loser, you always own too much.
Too much of it. It
could be in the smallest position. Here's the thing. NVIDIA has a wide open runway. So there are entire countries. There's something called sovereign AI. And Jensen Huang was just up in Canada, right? Meeting with the whoever runs Canada. I apologize to the folks in Canada. I don't know if the president or prime minister, whoever runs the country, right? And I apologize, I'm not a political guy. But Jensen was up there talking to Canada about sovereign AI, because now and you can look this up on Bloomberg, just type in sovereign AI NVIDIA. Entire countries need to have an AI strategy. Everybody has to have an AI strategy, because they cannot get left behind. And it's like a sprint. If somebody gets a 10-second or a 20-second head start on you in a sprint, it's hard to surpass that. So it's basically a wide open runway that NVIDIA has. There's no one that's even close. AMD is not even close in the technology. And here's the thing. AMD is a very good company. It's a very good stock. I'm sure it's going to do just fine. And I've got AMD. But when you're talking about these GPUs, NVIDIA has such a big technological advantage. We're not opening up a hot dog stand. To make these GPUs, this is not just something that you and I can say, hey, you know what, let's start to make GPUs and let's compete with NVIDIA. It's the technology. NVIDIA is so far ahead of the curve that I think they've got 75 or 80% of the market right now. And everyone's working on their own chip. Microsoft and everyone's working on their own chip, but it's just not that simple. That technology is not just something that, you can make a floppy disk overnight. So NVIDIA as now, they probably can't continue to grow their revenues, 265% year over year. Of course, we know that the law of large numbers starts to catch up. But at 26, and maybe the stock's at 30 times earnings right now because it's gone up, at that number for what their growth rate is, I think Procter and Gamble stock right now is about 23 or 25 times earnings for 5% growth. So if you said to me, hey Larry, the forward PE for Nvidia is 150 or 200, I would say, that's a pretty scary number, because how do you grow into 150 times forward earnings? But at 26 or 30 times forward earnings, it's probably one of the least expensive stocks in the market for PE versus their actual growth rate.
That is so important because there's a lot of misinformation out there. If you go through Twitter or anywhere, they're like, oh, it's the most overvalued. They actually put out, and because they don't know, it's unfortunate people don't do their due diligence and do a deep dive. It's important to go beyond the headlines and go under the hood. And that's the focus of this show, the Road Show. And that's why it's so important. I love that we're doing this today, because we're dispelling the myths out there and we're bringing the truth and reality. The PE that you've calculated 5 times, you've looked at these numbers over and over, and I've done my work. And I've been looking at these numbers as well. The forward PE is 26 to even 30. Let's say the way it's trading right now, went over 800 today. And even 30. Wow. I mean, that's low. And then you couple that with their significant growth and their moat that they have and their unique. I mean, they're light years ahead with their technology, and their technology is the future, is the most needed. Like I said earlier in the show, chips are like the new oil. So with that in mind, it's like, wow, and we'll never have enough of NVIDIA. I want more.
Everything runs on chips. Now, here's the thing, because, there could be people watching right now, and there's always, there's bulls and bears, and that's fine. There's vanilla ice cream, chocolate ice cream. There's 31 flavors of ice cream. And some people, because I talk to people and I go on Twitter and I watch on TV, and some people have been cynical of NVIDIA, all the way up. But over the past 2 years, the earnings have actually gone up faster than the stock price has. So NVIDIA's PE right now is lower than it was 2 years ago before this started. Now, here's the thing. NVIDIA stock can go down. There's no guarantee it's going to go up. The market could go down. Inflation could go up. The Fed, Jerome Powell could have a bad day and say, hey, I'm going to raise interest rates. I was just, kidding before. Anything can happen. So the purpose of my video, my talk with you today, is not to say, hey, NVIDIA, trees just grow to the sky and NVIDIA is going to go up forever and it can never. That's not what I'm saying whatsoever. What I'm doing is I'm just looking at the numbers, and I'm going to put the numbers on paper. We're going to put the numbers on the video, and we're going to say, okay, is AI 2024 the same thing as .com 2000? That's the purpose of this video. And so far, I think we can see that we're not even light years close in any metric whatsoever, any comparison, whether it's the return of the NASDAQ 100, if it's how many stocks are up, 1,000%, if it's over 100 IPOs that doubled in a year, there's nothing so far. And we're going to get to the best point in about 2 minutes. But there's nothing so far. Okay, so NVIDIA's up 700% off the dead lows, right? So we can always look at the dead lows. It had a 60 or a 70% correction. But how much are the earnings up? The earnings are up more. So if the stock price follows the earnings, listen, if Nvidia made the same amount of money today that they made 2 years ago, and the stock was up 700%, I say, hey, that's a problem. That's a bubble. That's a bubble, right? I make the same amount of money, but my stock is up 700%. But their earnings have actually gone up more than the stock price has. So there's nothing in that says, hey, that's a bubble. I mean, look at their margins, 72% margins. It's a big number.
Wow.
Their margins, look at their margins in 2023 were 56%. So they're selling more stuff and they're making more money off the stuff that they sell. They're not, sometimes you might sell more and sacrifice your profitability to get the volume. In this case, they're selling more and they're making more money for every dollar that they sell. It's crazy.
I had a 5-finger fundamentals once. I made a video. It's on my my channel. But I always talk about increasing margins are key. That is like one of the top criterias. When you see a company and you see increasing margins, that's significant. And then their growth is triple digits. I mean, high triple digits. In revenue and earnings. Earnings are up significantly, hundreds of percent. I think I have it right here. I think there was, their revenue from a year ago is like 126%. And their earnings up from a year ago, 765%. I mean, this is significant growth and nothing else I've seen like it. And
you want to see something pretty cool? Because I'm a business owner, you're a business owner. So NVIDIA's operating income went up 681%. You see it right here. Operating income went up. Look at how much their expenses went up. 2%.
Unbelievable.
2%.
Beautiful.
Yeah, it's so I don't know. And then obviously, it's just these are big numbers. These are big numbers. They've got as much demand as they can get.
They have demand. And I always say, I actually had a show about that too. Number one is demand. You want demand, and there's significant demand for their products. And then they're
really able,
they have 2% up in expenses, but 600 something percent in income. I mean, significant, beautiful numbers. And that's the point of this. It's not a buy recommendation, not a sell, none of that. It's
really math.
It's all pure math and dispelling the myths out there and just bringing the truth of what's really going on and how you really can't compare NVIDIA to anything.
Because here's the thing. People that own this stock right now have made a lot of money on the stock, and probably going forward, the stock is probably going to continue to do well if the market holds up and the earnings growth hold up, right? But it's just important because on social media, anybody can say anything. And I think it's important, for your viewers and for my viewers, let's just be objective. Forget about what your opinion is or my opinion or, whatever. Let's just sit down and let's look at the numbers because like I said, I was there 25 years ago. And let's just say, is this the same thing? And so far there's nothing that comes close. And then we're going to go to the next thing. And this is just quickly, this talks about what the market was for the bubble in these IPOs, but basically just what it shows right here. And this is from Wikipedia. It was possible for a promising .com company to become a public company via an IPO and raise a substantial amount of money, even if it had never made a profit or in some cases realized any material revenue. So this was the market back then. There was also a massive telecom. It talks about the bubble in telecom. There was an American Telecommunications Act of 1996, and telecommunications equipment companies invested more than $500 billion, mostly financed with debt. So there was a telecom bubble. They were borrowing money to pay for this stuff because what we're going to take a look at now. So this is the NASDAQ 100. So I've got the top 40 stocks, but I really just want to look at the top 10 or 15. But this is our, the Magnificent Seven, as they're called. So we just looked at 100 IPOs that doubled 1999. We just saw Wikipedia told us you could come out with an IPO if you had sales or earnings. But now here's our top NASDAQ 100 stocks. Microsoft Corporation, in the trailing 12 months, their income, $82 billion. $82 billion. Apple, $100 billion. Nvidia, $29 billion. Amazon, $30 billion. Alphabet, $70 billion. Meta Platforms, $39 billion. So if we just look at these top six, 180, 210, 240, 310, 340, $350 billion in net income just in these top six stocks in the NASDAQ 100. So the difference right now between these companies is they're generating cash, they're generating positive cash flow. Meta just announced they're going to pay a dividend. These companies are cash cows.
Cash cows.
NVIDIA's 72% margins. These companies that are leading the NASDAQ 100 right now are making a significant amount of money, right? Back in 99, Amazon was losing money. Cisco was the number one company. They made $2 billion. I mean, you'd have to go down, and once again, we know about inflation, but if we go down to Palo Alto Networks, who just really got hammered in the market, right? They made 2.2 billion. So they had a bad, the market took it as a bad quarter, even though they beat. But it's just so far down. These companies at the top are making real money. They're generating tons of cash flow. NVIDIA's got more cash right. They've got so much cash. And that's the difference, is the leaders, the Magnificent Seven that people like to call them, right? These leaders are just generating cash on cash. I mean, how much cash does Apple have in the bank? I think it's a couple $100 billion, right?
Mm-hmm.
The big number. That's the difference between these companies and 1999. Amazon wasn't making any money. Intel did make money. Microsoft was making money. I don't know if America Online, they were a big company in 99. I don't know if they were making any money. But these are real numbers. These are some of the most profitable companies in the world. I mean, Apple made $100 billion last year. How many companies, maybe Saudi Aramco makes more, I don't know. But I mean, how many companies in the world are making $100 billion over 12 months?
Not many.
Yeah. So these are real companies. This is not eyeballs. This is not, because that's what we talked about back in 99. They said, forget about price to earnings, forget about price to sales. We're going to talk about eyeballs. How many eyeballs are you getting on your pets.com page or your webvan.com or whatever it was? So these companies just generate a ton of cash. So that's why, to me personally, and my business is based on the commentary that I provide to my subscribers. And my biggest positions are NASDAQ 100, NVIDIA, Microsoft, AMD, companies like that. My biggest positions are in the NASDAQ 100, and I just don't see it. Listen, if I see a bubble, I'll tell you first thing, Ro, this is kind of scary. These numbers don't make sense. Why, but there's nothing that I see. And like I said, maybe inflation goes up, maybe Powell changes, maybe whatever, maybe bond yields go up. Market can go down anytime for any reason whatsoever. It could go down today. I haven't even looked at it in the past hour. Maybe I don't even know. But I'm not saying the market can't go down. I'm saying that if anyone's watching this video right now and they can say, hey, Larry, that looks like a bubble compared to March 2000, I would be very open-minded. I'd love to see it, but I just don't see it.
Agreed, completely. The market can do what it wants. It can go up and down, do whatever it wants, and it will.
Yeah.
Nothing moves in a linear path. And it's like a zigzag. If you look at any chart, you know that. And NVIDIA, went over 800. I think now it's trading around 790. It's just bouncing all around. But the story here and the point of this show is to demonstrate that this is not 99, 2000. And it is not even resembling a bubble. And people and everyone should always know their history. And that's what I hope we were able to do today, was to go through this. And to me, when I think of 99, I remember myself back in 99, and being at a party and getting together with people and everyone talking about the .com and everything with the .com in its name. It was just all talk, and it was all speculation, and they were not profitable. These companies did not make money. They were not making earnings. And, it was a different world back then. And everything was just getting started, the internet, and everything was still new. Now,
so new.
Right now, that's the core of everything. I mean, the internet and technology is everything, right? We wouldn't even be talking today if we didn't have technology. So the technology's become the core, while back then it was more of a fringe, and it was coming into the center, but it was still in the beginning. And now this is the core. So another thing I think people do is maybe they see the NASDAQ, they see tech, and they just think of tech, in the bubble, and maybe they make that correlation. But tech, like I said the third time now, chips are the new oil. Tech is everything. And these are the cash cows. These are the cash generators. Microsoft, Apple, NVIDIA. I mean, these are the ones that have the money. And it's definitely a clear case to me that there's no way of comparing these time periods.
And what's interesting, what you just brought up, and I just thought of this, if you look at the top 40 companies in the NASDAQ 100 by market cap, it looks like they're all very profitable except for Micron. Looks like Micron loses about 6 billion. Micron's a super low margin company.
Yes.
But if we take a look, even, Airbnb, $4 billion in profit.
Wow.
Starbucks, just if you go up Lam Research, 3 billion. Every single one of these companies, I didn't go back. I did not go back to the NASDAQ 100 in 99 and look at, the top 40 companies and, see who was profitable and not. But I'm pretty sure that the numbers didn't look like that.
No.
Yeah.
Yeah, for sure. This is significant. Profitability is key. And a different world we're in right now. So this has been amazing, absolutely amazing. And I hope we were able to enlighten people with, objective research. You did excellent research here. You just compared numbers, and there's no subjectivity at all. I mean, we have our opinions, but this has nothing to do with any of our opinions. This is just straight numbers. And I think my opinion is formulated based on these numbers, because I've been doing similar research. And when I see the beautiful, income statements and quarterly reports from NVIDIA, I mean, wow. I mean, and it's just beautiful when you see these increasing margins, higher earnings per share, triple digit percentage growth. I mean, that's what we want in a company that I like to put my money into. It would be something like that.
Sure. I mean, I bought more NVIDIA yesterday, because I put this research together, most of it Wednesday night. And I'm like, how can I not put more money into the stock? And I hope it comes down another $50 because I'll buy a lot more. I bought some yesterday, nothing, earth shattering. But if it would come down another, 20, 30, whatever, $40, I'd like to buy more of it, so we'll just see. But these are interesting times. I hope we do a podcast in 2 years and we've got 100 IPOs that have doubled, and stocks that are going up 45x, because we might be on the boat. We
will be on the yachts. We'll be like passing each other by, and maybe around the Florida coast.
We'll be on your yacht. But I hope what I wanted to provide to everyone is just here's the numbers. Look at it yourself. Is it the same thing or is it not the same thing?
Yeah, make your own decision.
That's all.
Based on that. Absolutely. And I love that. Thank you so much for all of this. And I hope we were able to enlighten people. And, you know, everyone ultimately come up with your own conclusion, but here are the numbers, here's the data, and it's pretty clear cut to me. So thank you so much, Larry. BlueChipDaily.com. Your Twitter is amazing. And I have to say, you know, we've known each other for a while. I love your tweets when you bring up, you know, all these great traders from history. And I think you did something today, and you just talk about all these great trading rules and all these wise words, and you really bring calmness in chaos. And because the markets can be very chaotic and, you know, a lot of frenzy, and you bring so much calmness to that by bringing up these amazing traders, and it's just wisdom. And it brings us back to reality. So thank you so much. Blue Chip Larry. That's what I call you. You're Blue Chip Larry.
Thank you so much. You know, it's always fun to chat with you. I like the name I love the name Blue Chip Larry. I think it's very, very clever. And thank you so much. I really appreciate your time.
Thank you so much, Larry. And I can't wait to see you again.
Thank you. Take care.
Take care.